India has been quietly making a major shift in how it manages its money. According to a new report on Bloomberg, new data shows that India's holdings of US Treasury bonds have fallen to a 5-year low. They're now down to about $174 billion, a sharp drop of more than 25% from their peak in 2023. Now, here's why this is important. For decades, US Treasuries have been seen as the safest place in the world to park foreign reserves. They're backed by the world's largest economy and supported by the dollar's dominance. But India is now reducing its exposure to the dollar, and it is not alone. Several big economies are looking for alternatives to dollar assets. But first, let's talk about India. There are three main reasons why India is doing so. The first one is to protect the rupee. India's currency has come under heavy pressure after trade tensions with Washington and steep American tariffs on Indian exports. So by selling US bonds, the Reserve Bank of India gets the dollars, which it can use to buy rupee and support its falling currency. The second reason is the fear of sanctions. After the US froze Russia's foreign reserves in 2022, many countries began asking a very important question. What if we are next? If you hold too many dollar assets, it means you're vulnerable to US political decisions. And experts say that India wants to reduce that risk. Which brings us to the third and the most important reason in all of this: diversification. India is shifting more money into gold and other reserve assets. Its gold purchases have surged in recent years, mirroring moves by China, Brazil, and Poland. To put it simply, the central banks of these countries are no longer putting all of their eggs in one basket, or the dollar basket in this case. It doesn't mean that the dollar is not an attractive option. Economies like India are now interested in diversifying where they park their money. Now, this shift is also linked to current geopolitics. Remember, ties between Washington and New Delhi have been strained, thanks to the unfair trade war waged by the United States of America on India over disputes over oil imports from Russia. Last year's sudden deterioration in ties reportedly jolted Indian policymakers. India started reassessing its financial exposure. Analysts note that India is making sure that its economy is not over-dependent on any one country. And it's not like India is abandoning the dollar. US Treasuries still make up around 1/3 of its reserves, and foreign ownership of US debt remains near record highs. So this is not a collapse of confidence. It's just what a recalibration looks like, which brings us to the next part of this story. What will be the implications of this entire move be? It's big. When large economies reduce their reliance on the US debt, it raises questions about America's financial dominance, about whether the dollar will remain unchallenged in the long term. And a recent survey found that nearly 60% of central banks are now actively looking for alternatives. And that tells its own story. Some experts believe that India's selling may slow down if a US-India trade deal is finalized and the rupee stabilizes. But many say that the broader trend is irreversible. The world is becoming more fragmented and more cautious, more strategic, and more protectionist in its policies. So what we are seeing right now is not just a story of one economy or a few countries. It is a wider story. And the Indian economy is just trying to position itself for a more uncertain world, for a world where even the dollar is no longer taken for granted.